and it is my proud privilege to welcome the other visitors also here, Sabha and Rotarian Valliyappan, and I think there are a few others also. I think the screen has changed for me. I'm not able to spot the names.
Sam Manipadam.
Veerappan
Yeah,
is there.
Sam Manipadam, Rotarian Veerappan, and others. Well, it is a fantastic evening here, and we seem to be going back and forward with this COVID pandemic. It doesn't seem to be getting away or getting into. We really have to wait and see how things are going to pan from here. We thought the worst was over, but the worst seems to be still coming, and our hopes on the vaccines are still keeping us going. And the one good news about India is from the 1st of May, anyone above 18 can take the vaccine. So I request everyone to make use of this opportunity and stay protected. And the best protection will be to stay indoors whenever possible and to try and avoid going to public places and public meetings as far as possible, and to use your own transport systems. Kindly do not use public transport or Ola if possible. Try to use your own transport because most of the patients are using these public transports, and the kind of awareness that we expect others to show is not there. I know for certain people who have not been fully cured, who are not following the mandatory isolation and are going to work and as well as traveling. So the awareness that you expect from people who have been already affected from COVID to not be a spreader is not there. So please do apply sufficient caution. Now I request Rotarian Prasad to say a few words and to address and welcome his club members too. Rotarian Deva Prasad.
Yes, thank you, President Suresh. Good evening, friends. Of course, good morning and good afternoon to our friends who joined from abroad. On behalf of our E-Club of Chennai, I heartily welcome our chief guest, Mr. Karthik Hariharan from US, and also extend our warm welcome and greetings to all our fellow Rotarians and friends who joined us in this meeting. Our club, Rotary E-Club of Chennai, is the first and only E-Club in our Rotary District 3232, and known among our few online clubs in our country. The club was formed about 8 years back during 2013 when online meets in Rotary was hardly known. Today we notice the entire world is meeting virtually, whereas Rotary International has designed this kind of online structure much before our COVID compulsions. Now it's become a complete e-world today, and we had our meeting on this line of thought from day one. Our club members are qualified professionals hailing from different cities, pan-India, and some of them settle across the globe in USA, Dubai, Muscat, Malaysia, and London. Currently, our club membership is 31. About 40% of our members are living abroad, and about 1/3 of our members are women. On our club's behalf, I thank the president and all club members of Rotary Club of Madras South for providing an opportunity to participate in this valuable meeting. Thank you. Over to you, President Suresh.
Thank you, Rotarian Deva. And I have another very happy announcement to make. I was just shared a mail by Rotarian Shrikant Ford saying that this year they are granting us 750 computers for distribution. So I'll be sending out a mail to the district as well as to our own members. So if there is any school or any institution which deserves to get the benefit of these computers, kindly to get back to us. We'll shortlist them and try to give priority to our own members' recommendations. Thank you, Shrikant sir. Would you like to add anything to this?
No, President, thank you. Since we have a larger audience, I just wanted to let everyone know that this is our 11th year, and so far we have already distributed to the district and to because of the help that we get from Rotarians in identifying the right schools, 13,000 computers over the period of time, and this 750 will add to that 13,000. So very grateful to the club for helping us to spread digital literacy wide and far through this method, and looking forward to the next 3 months where we can distribute these computers. Ford gives these computers free of cost, so there's no charge. They're all end of life 2 or 3 years computers, different configurations, laptops, desktops, engineering workstations. So those are the three, and then so each of them goes to the right use. Thank you, President. Thank you, everybody.
Thank you, Shrikant sir, for keeping our club's flag still flying high. You have been doing it for 11 years now. Thanks a lot. And the Food Literacy Program has been one of our flagship projects, and I'm extremely glad that we could do a sizable number of distribution this year too. Now, I request Rotarian Rajan Babu to introduce our speaker.
Thank you, President. Very good evening, Southerners. Good evening, friends from E-Club. And a very good morning to you, Karthik. Thank you very much for taking out your time to address us on this evening for us. And I know it is a subject of mystery, subject of, whatnot. And we're all looking forward to hear from you. Yes, friends, one of the financial buzzwords of today is Bitcoin. It's a word of power, a word of mystery. It denotes excellent potential for wealth creation. This evening, Mr. Karthik will decode the mysteries of Bitcoin for us. He will explain the phenomenon and tell us how one can invest in Bitcoin and why it is described as digital gold. Karthik Hariharan did BTech in engineering from IIT Madras, obtained MS in material science from Northwestern University, Illinois, and an MBA from the Kellogg School of Management from the same university in Illinois. He has been a director of Apple in Silicon Valley from 2016, and he was earlier the founder, president of a company called Glimpse, a startup company with focus in healthcare, which was later acquired by Apple and also engaged Karthik as a director. Prior to this, Karthik held senior level positions with the Fortune 100 and 500 companies like EdgeSpring, SAP, and Cisco, and most of the time spent in the Bay Area. Karthik says, though he has been in technology industries all along, his responsibilities have been in business development, hence his interest in Bitcoins. I'm sure members of Madras South and members of E-Club who has joined us today will find his talk illuminating and useful. Over to you, Karthik.
Thank you so much, honored members of Rotary Club South Madras, as well as E-Club. Pleasure to address you all here today. And my hearts go out to people in India, in Chennai, all over the world who are battling COVID. And I hope everyone stays safe and appreciate this e-forum in these tricky times. My talk today is to share with you a little bit of what I know about Bitcoin. I'm not a technologist in Bitcoin. I'm not a software developer. Whatever I'm sharing with you here today is just personal passion and information that I've gleaned over the past many months as I followed this space, similar to you all with interest in what is happening in there. So I hope to convey to you a little bit of under the hood of what is going on in there. Also, I must upfront beg a little bit of an excuse if at any point I might need to pause. I'm a little under the weather, but if I need to pause, I might just momentarily put the screen on blank and then come back to you after I get a sip of water or something like that. But hopefully that won't be the need. So going right in, before I talk anything, I'm assuming everybody can see my screens. If not, let me know. But if you can see my screen, then the next slide is
clear. You're
great.
loud and
Super. Before I do, all opinions are personal. They're not the opinions of my employer or anyone else. And I'm also explicitly not giving you any investment advice to either buy or not buy, to sell or to keep Bitcoin. All of that, I think you'd have to make on your own accord, speaking with people you trust and your financial advisors. But hopefully it just helps you understand the space a little better. We'll cover, as you talked up front, a little about what is cryptocurrency, which Bitcoin is one of the most prominent examples. How did Bitcoin come about? What is it really? Why is it called digital gold? And just looking ahead, where could it go from here and where are we and how the future could evolve a little bit. Feel free to ask questions at the end. I'll try to answer to the best of my ability. So a cryptocurrency is what is called a digital asset. And digital meaning it is in the digital form. And the key part about it is decentralized. It is not issued by any central bank or government or economy or territory, which is kind of opposite to how any currency is issued. Currencies are issued by governments who are issuing the money, who ensure that there is value to the money and that there is a medium of exchange that is acceptable in the economy that they function. This asset is called a digital token, and it has no intrinsic value whatsoever. The only value it has is what we ascribe to it. You can't eat it. You can't make anything out of it. It is totally digital. And so the value that we ascribe to it is what we deem to it around that. There are over 5,000 cryptocurrencies today that are generated through electronic means. Bitcoin just happens to be the most valuable and most preeminent as known. And value is calculated by what's the price you would have to pay to buy one Bitcoin today if you were to buy it in the open market, multiplied by the amount of Bitcoin that has been created so far, you get the total value of Bitcoin. And it's the most valuable by far. It accounts to over 70% of the overall cryptocurrency market. And we're going to talk a little bit more about what is its specific value shortly. As I said, it's one of the most famous. It was one of the first, and subsequently many others have been released that are also gathering fame and popularity, but we're not going to talk about all of those, and we're just going to focus a little bit today on Bitcoin itself. Bitcoin, Jack Dorsey, the founder of Twitter, the famous company that is responsible for worldwide communication in this short format, said the world will ultimately have a single currency. The internet will have one currency. He believes that to be Bitcoin. He believes any transaction that you do on the internet, if you're buying something from Mongolia and producing something in Russia, if you're trading between US and India, you don't have to worry about currencies and transferring the money to a central intermediary who converts from one currency to the other so that what you're selling in rupees can be bought in dollars and the dollars can be converted to rupees that can make its way to you, etc. He believes it's going to be Bitcoin. It's a provocative statement, and he's entitled to his opinion. He's certainly a technology luminary with great renown. So it's an opinion that is worth listening to, if you will. On the other hand, we have a luminary no less than Warren Buffett, one of the most successful investors of our time, perhaps of all time, who said, stay away from it. It's a mirage. It's an illusion. There's nothing to it. With such contradictory perspectives, polar opposite, diametrically opposite perspectives, what are we, the average person, to make of Bitcoin, if you will? More recently, Jim Cramer, who is the delightful, entertaining stock market pundit and a guide for consumer investors all over the world, and a very successful hedge fund investor himself, said he would put his money where his mouth is and take compensation in Bitcoin. So now it's becoming interesting. People are for real saying, pay me in Bitcoin. So if somebody is willing to take payments in Bitcoin and make a living out of it, it must mean that they are, at least they are very convinced about its potential and the ability to make a living, if not a fortune from it. So digging into it, let's look at some numbers. $60,280. You might wonder what that number means. That number is the price of one Bitcoin as of a few days ago on April 17th. That's a massive amount of money. $60,000 for just one Bitcoin. What is $1.179? It's a very interesting number. $1.179 is actually not dollars, but it's trillions of dollars. And this represents the entire market cap of all the Bitcoins created to date. That's a mind-boggling number. It's the GDP of many countries, as we're going to see. So that is the value of all the Bitcoins that have been created so far in a short period of time. As you saw, the first Bitcoin was 2009. So in a little over 12 years, $1.2 trillion has been created. And somebody is owning this much of wealth out there, or is theoretically owning this much of wealth. Satoshi Nakamoto. You might hear this name associated with Bitcoin. You could be forgiven to think he's the one who's the wealthiest person regarding Bitcoin. But in reality, it is a little bit more nuanced and complex. Satoshi Nakamoto is the anonymous inventor of Bitcoin. And this is actually not his real name. It's a pseudonym. He just gave it himself. And nobody knows who he is. Is he Indian? Is he Chinese? Is he American? Is he Russian? No one has any idea who or what nationality Satoshi Nakamoto is. What he did is he solved a hard problem associated with digital currency with a white paper in 2008. Digital currency as a concept existed from the late 80s. It's not a new idea, but it always had a bit of technological problem of how do you prove and ensure that when you create something in digital as a currency and I give it to you, After all, it's digital. And I could make a copy of it and give it to someone else. We all have made copies of files. We've made copies of photos and have shared it. What is it to prevent me from copying my digital currency and creating more and more versions of it and sharing it with others? How do I ensure cryptographically that this is not a duplicate, right? And that, and along with several other problems that are associated in the electronic domain of digital currency, he solved and published it for the world in an open white paper in 2008. We're going to look at his paper in a second. But before we look at that, let's look at a bit of context of the times we are operating in when Satoshi Nakamoto published the white paper. September 15th, 2008. Some of you might remember that date. Those in the finance industry will never forget it. That's the date when Lehman Brothers collapsed, filed for bankruptcy. It started the financial recession in the United States and resulted in untold hardship and a complete collapse of the financial system almost for a few days until it recovered just barely. And worldwide, there was really considerable doubt what would happen to the financial markets, economies, countries worldwide. It was a time of unprecedented financial turmoil, and our faith in the financial systems was shaken to our core because they allowed largesse, they allowed greed, they allowed mishandling of money in a way that should not have happened and resulted in complete loss of wealth, loss of savings for millions and millions of people. So in that context, October 31st, 2008 takes on a particular specific and special meaning. That's the date Satoshi Nakamoto released his white paper entitled A Peer-to-Peer Electronic Cash System, a very arcane title, a very technology-specific paper. You'll be forgiven to think and gloss over it if you thought, what is this? It's just one other paper that has been published in the annals of thousands of papers published worldwide. In that paper, he talks of a few things. The first thing he says is, commerce on the internet is almost relying entirely on financial systems to process that payment. As I mentioned to you, you need a bank, you need a clearinghouse that takes payments from you, gives it to someone else, stores your money in receipt such that you're able to be sure you got the money and then can release your goods to the other side, knowing fully well that you will receive payment when you ship your items. All of this is based on the trust that we have posed in a central system and in the currency that central governments have given us. Satoshi Nakamoto said, this trust is an inherent weakness of the system, not a strength. It results in potential for misuse. He says, what is needed is a system that is based on cryptographic proof, allowing any two people across the world to transact each other without the need of a central system, of a bank, of a government, or others to intermediate, so that trust, as it's known for, is done away with. And this system, he said, is possible as long as you have a node of computing power that is cooperating together and does enormous amount of computational work that allows this proof to exist. It's a very complex and nuanced idea, and I'm not going to attempt to unpack the entirety of it. What I will say to you, the analog is almost to the beginning of the internet. The internet did something exactly similar. It took central computing that had to go through mainframes, central communication that had to go through telephone exchanges, and made it decentralized. A whole world wide web of servers exploded. These servers are all decentralized. Packet transmission of data results in all of almost what we are able to achieve today in the technology and communication space. The fact that I'm able to do a Zoom call with you, the fact that I can buy things on through PayPal, the fact that we can do video streaming, the fact that we can do education, content, any number of things that are possible are through that innovation of decentralized computing enabled by the internet and the advent of the browser, which allowed the revolution to happen in the 25 years since the advent of the browser in 1994. In many ways, people are thinking we are at a similar point in the advent of cryptocurrency, where payments could be revolutionized and transformed with Bitcoin as one potential contender for that. Or at a very minimum, this whole world of transactions and commerce could be turned on its head, just like the internet did for commerce many years ago. So what is Bitcoin mining? Rather than you hear it from me, I thought what will be helpful is watch a 2-minute short video that gives you a really succinct explanation of what Bitcoin mining is. So I'm going to play it now. And if you have any trouble hearing it, let me know. But otherwise, I hope you'll be able to hear it. And it's about 2 minutes long, exactly.
What is Bitcoin mining? Bitcoin operates as a peer-to-peer network. This means that everyone who uses Bitcoin is a tiny fraction of the bank of Bitcoin. But where do Bitcoins come from? With paper money, a government decides when to print and distribute money. Bitcoin doesn't have a central government. With Bitcoin, miners use special software to solve math problems and are issued a certain number of Bitcoins in exchange. This provides a smart way to issue the currency and also creates an incentive for more people to mine. And since miners are required to approve Bitcoin transactions, more miners means a more secure network. The Bitcoin network automatically changes the difficulty of the math problems, depending on how fast they're being solved. In the early days, Bitcoin miners solved these math problems with the processors in their computers. Soon, miners discovered that graphics cards used for gaming were much better suited to this kind of math. Graphics cards are faster, they use more electricity, and generate a lot of heat. The first commercial Bitcoin mining products included chips that were reprogrammed for mining Bitcoin. These chips were faster, but still power hungry. ASIC, or application-specific integrated circuit chips, are designed specifically for Bitcoin mining. ASIC technology has made Bitcoin mining even faster while using less power. As the popularity of Bitcoin increases, more miners join the network, making it more difficult for individuals to solve the math problems. To overcome this, miners have developed a way to work together in pools. Pools of miners find solutions faster than their individual members, and each miner is rewarded proportionate to the amount of work he or she provides. Mining is an important and integral part of Bitcoin that ensures fairness while keeping the Bitcoin network stable, safe, and secure. For more information about Bitcoin mining, visit bitcoinmining.com.
So that gives you a bit of idea of what Bitcoin is and how it has come about. So it is Bitcoin mining, it is decentralized, it's a whole bunch of computers that people whom you don't know, anonymous people who set it up all over the world in far-flung locales, from Mongolia to Sweden to Norway to US to India to, maybe not India, we'll come to that, to China, all over the world, who are setting up these computers, solving hard math problems, getting rewarded in Bitcoin, and then are able to trade it, and that seems to have generated an enormous amount of wealth. What is January 3rd, 2009? January 3rd, 2009 was the date the first Bitcoin block was mined by Satoshi Nakamoto. That's a very important date because Bitcoin transcended from a theory, a paper, to reality. He published it and he issued a Bitcoin and he made the code open source, what they call anybody can use it, and others would soon be able to mine using computers and create Bitcoin on what is called the blockchain technology. So others slowly and quickly in the technology community paid attention and started doing that. And 1/8,000th of a dollar was the price of the first Bitcoin. It was not a penny, it was not 1/100th of a penny, it was 8,000th of a penny of a dollar. So a tiny, tiny value for the first Bitcoin that was placed when it was created. May 22nd, 2010 was another interesting date. We know that Bitcoin was a paper. We know Satoshi Nakamoto created the first Bitcoin. Others joined him. And on May 22nd, 2010, the first economic transaction took place. And what did it happen? Pizza was bought. Of course, pizza would be bought as the first item. And a programmer in Florida sent 10,000 Bitcoins to a person in exchange for 2 pizzas. And he paid $25 using 10,000 Bitcoins. So a fraction of a penny still for each Bitcoin. And he was rewarded by 2 sumptuous pizzas. And he must have thought he scored the deal of a century by creating something out of nothing and that he might have thought or others might have thought is worthless, and got 2 pizzas. Well, in today's dollar, remember, a Bitcoin is $60,000. So those 2 pizzas have gone down to be the most expensive pizzas ever bought in history and would be costing the equivalent of $600 million today. So it's a phenomenal sum to pay for pizza. In honor of that, May 22nd is always celebrated as Bitcoin Pizza Day. $600 million for 2 pizzas. Digital gold. Why do some people call it now digital gold? Well, that's because Bitcoin has many similarities to gold. Like gold, it cannot be created arbitrarily. Like gold, it must be mined. Instead of out of the ground, it is mined via digital means. Like gold, it is finite. Only 21 million Bitcoins can ever be created based on the protocol that Satoshi Nakamoto invented and enshrined in the protocol. So there is a finite number. Unless the protocol changes, just like more gold could be discovered perhaps sometime if people dig in under a volcano or some part of the world and discover, but the known reserves of the world are finite, and the known amount of Bitcoin that can be mined is finite and is actually 21 million. As a result, Bitcoin in many ways is a finite supply and can be considered, like gold, to be a scarce commodity that has value because of its scarcity and difficulty in extraction. Well, how much Bitcoins, or where does Bitcoin get created? It's in server farms like these. Hundreds and thousands of computers are strung together, solving, crunching, solving math problems with the singular purpose of solving that, and get rewarded in Bitcoin as a result of that. And that's distributed all over the world in order to do that. How much energy does it require to create Bitcoin? The answer is a lot. You can see on the left extreme, China, US, and India, total energy consumption in terawatt hours. Bitcoin, the aggregate consumption to create the amount of Bitcoins in the world, is somewhere between the total energy consumption of Sweden and Ukraine. That's a massive amount of energy that has gone to create this cryptocurrency so far over the last 10 years. So in many ways, it is an energy hog. And is that worth it? Cumulative number of Bitcoin mined today, so far in the 10 years since the first Bitcoin from Satoshi Nakamoto, it has grown rapidly and asymptotically, and we have mined about 18.5 million Bitcoins so far, as you can see on the right-hand side on the top. So a large number of Bitcoins have been mined today already, but not all of them. 2140, that is a date or a number. It is actually a date. It is the year when it's expected that the last Bitcoin will be mined. So while we have mined 10 million Bitcoins very quickly, the math to create every additional Bitcoin is harder and harder, takes more and more computing power, costs more and more. So in some ways, the Bitcoin price will have to go up because the cost is going to be more to create every marginal Bitcoin. And the last Bitcoin, the remaining 3 million, will be mined slowly over the next 110 years. And the last one is expected to be in 2140, long past when we will all be alive around that. What has been the average price trend of Bitcoin? I told you the first Bitcoin is a fraction of a penny. Since then, the price has gone up. Over the years, by about 2014, it was $800, and then it came down again to $425. It went up to $20,000 in 2018, crashed to about $5,000, and now most recently is at $60,000, following a spectacular rise in the last 3-4 months of 2020 and in the early part of this year. The market cap of Bitcoin, which is the total value, has also commensurately increased, similar to the price. And as you can see now, is $1.12 trillion. So that's the facts of where Bitcoin has come from and where it is going. And the last part is, one Satoshi is the smallest Bitcoin that someone can buy. You don't have to spend $60,000. The smallest is 1/100th of a million of a Bitcoin. So if Bitcoin reached a price of $1 million, you could buy a Satoshi for 1 penny. So 1/100th of a dollar for 1 penny, you could buy it. That would be the future, if you will. Let me switch gears and spend about 5-10 minutes talking about, do I have about 10 minutes more? Let me know, or 5 minutes?
Yeah, please go ahead. Please go ahead. Yeah, 10 minutes, yes.
So about 5 to 10 minutes, I'll wrap it up. Looking ahead, where could it go from here? Let me give you some statements by lots of people in the industry to give you some color around that. Bitcoin will decline, and eventually it'll go to zero. Many smart people in the finance and trading industry are telling that. It has no intrinsic worth. It is worthless. You're buying digital stuff that has no real use today. Why would it be worth anything? This is fool's gold and a Ponzi scheme, are words. People are also called it rat poison. A very famous person called Charlie Munger, as Nogon and Warren Buffett have said, this is rat poison. It'll kill you. Others have said it's a terrible store of value and a terrible investment. And the more Bitcoin becomes mainstream, the more governments are going to take attention to it, because they're not going to let something take over the currency and will stop this and will undermine the goal of cryptocurrency. It is right now wild, wild west, done by hackers, and soon legitimate governments will stifle its growth, and it'll no longer be what it is. And sometimes another person said, it's so absurd that you don't even know where to begin. It's so obvious. I don't need to tell you about it. What is this cryptocurrency? We have no plausible need for that. And that has been said many, many times in the past. In fact, over 400 times there have been obituaries written in the press by leading people. This graph shows the number of times people had said Bitcoin is dead. And you can see in 2017 was the peak when it reached its value of $20,000 and then it declined. And many of those people, if they had invested in Bitcoin, they would be quite wealthy, because if you had spent $20,000, it's worth $60,000 today. If you had bought it for $500, it's worth $60,000 today. You'd have made a lot of money if you had bet in Bitcoin instead of calling it dead. So, what is one to make of this? And one way to think about it is looking at what major financial institutions are doing and thinking about it now. Most of the major financial institutions are now becoming serious about Bitcoin, whether it is Deutsche Bank, the famous bank in Germany, or whether it's Morgan Stanley or Goldman Sachs or JP Morgan. Initially, they've all sat out of Bitcoin, but now they're saying it's too important to ignore. Too much money has flowed into Bitcoin. Too many institutional investors are there. They're saying it will continue to attract investment and people should consider it as part of their investment strategy. But at the same time, they're also saying they think the Bitcoin is very volatile, and the price of Bitcoin, over 50% of people expect it to decline and be 50% of what it is today in the next 12 months. Oh my God. So you're telling me on the one hand it's important, on the other hand, you're telling me if I buy now, I might lose money. So why would I do that? So full of contradictory opinions and perspectives is what we're hearing, and can't really make sense of that as well. The chairman of the US Federal Bank has gone on record to say in a recent conference it's highly volatile and therefore not useful as a currency. How would I pay you something when I know that tomorrow it could be worth twice as much? I would be real fool to pay you in Bitcoin when tomorrow it is worth twice as much and I could have paid half as much for it. I might as well keep the money then, right? So it's head scratching to pay with something that has got such swings in value. Imagine if the rupee were to be 75 rupees to the dollar today, tomorrow 150, and day after tomorrow 210 rupees to the dollar, or next day 30. It'll be utter chaos to conduct transactions, and nobody would know how to transact and what to pay and which day to use for conversion around that. So he thinks it's more a substitute for gold as an asset rather than the dollar as a currency. Let's play with that idea for a minute. Gold. About 2,500 tons of gold are mined per year. About 191,000 tons have been mined in total of gold in the entire world. That accounts for about 75% of the world's supply of gold has been mined. Something similar to Bitcoin, right? 80%, 90% of Bitcoin has been mined. Most of the gold, frankly, goes into jewelry, of which India is one of the primary consumers. Only 10% is actually used for something like industrial uses. Much of it is sitting really unused, like Bitcoin. If you ignore the jewelry component of it, it is just sitting around as gold. So in many ways, you could consider Bitcoin, gold, similar comparable uses around that. And if you think about that, this number is something you have to keep in mind. $9.19 trillion is the world's value of gold at today's spot price of about $1,780 per ounce of gold. $9.19 trillion. So about 9 times the value of Bitcoin. So what is this number then? $510,000, 780, would be the price of one Bitcoin if you thought the market cap of Bitcoin would reach the price, a market cap of gold. So if Bitcoin went from 1.12 trillion to $9 trillion in market cap, if the world's central governments and the reserves say we are no longer only going to use gold as a hedge, as a protection of our currency, but are going to store Bitcoin and replace, or in addition to currency, gold, store Bitcoins in their vaults, in their digital vaults, it could go up to $510,000. So still a 10 times increase in what it is. So it could go to zero, it could go to $510,000. So those are some bookends that people have to play with as you think about your investments. Tesla has recently bought $1.5 billion of Bitcoin and plans to accept it as payment for purchase of the Tesla car. If you go to the Tesla website, you can buy a Tesla car by paying for it in Bitcoin. I can issue them and say, here is my 1 Bitcoin or 2 Bitcoins and buy my car for that. So an amazing thing, transactions taking place not only with Tesla, but a bunch of other companies worldwide. At the same time, China has gone aggressive in its regulation and made it difficult to mine Bitcoins and for Bitcoin people to prosper. The Indian government is looking to impose a complete ban on cryptocurrency and Bitcoin, such that holding of even a digital asset would become illegal. And this was talked about in March, so we're expecting the legislation to come about anytime now. So this is a very hot topic, and India is considering its own digital rupee, perhaps. So a lot of discussions and technologies. Meanwhile, Turkey just a few days ago, this is April 16th, banned payments in Bitcoins. They didn't ban the ownership, but they banned payments. So crypto tumbled as a result of that. And just yesterday, Bitcoin had a massive sell-off and decline in 15% in just a single day when the US Treasury is planning to tackle financial institutions for money laundering through digital assets. So lots of things happening. Federal governments are planning to take notice. And really, although Bitcoin is almost 10 years old, what is true is that many governments don't have a clear policy to restrict, regulate, or manage Bitcoins and are thinking hard about it. And it's a legal gray area for much of the world. Given this legal quagmire, investors should proceed with caution because anything and everything that could happen may happen, as I've shown you in the previous slide. So I'll give you one parting thought just to end this talk and take any questions. Just an interesting reflection. We are at the cusp of a revolution, 7 years or 10 years into it, in many ways similar to the advent of the internet. If you think about what happened in 1994 with the browser and the start of Yahoo, there's tremendous amount of venture capital investments coming in. Many companies are being built with the idea of building technologies and capabilities that we can't yet quite imagine on top of Bitcoin. But at the same time, regulations and massive fluctuations in value are taking place. And all of it is due to an anonymous founder. We don't know who Satoshi Nakamoto is. It's a pseudonym. It could be one person. It could be 10 people. We have no idea who he is, and nobody has verified it. And that's actually a very interesting enigma and something to chew on as you think about Bitcoin, if you will. Hope this was helpful, if not entertaining. I'll pause here to take any questions, and thank you for your time.
Yeah, the forum is open to questions. Those who would like to ask any questions can unmute themselves and go ahead.
Yeah. This, among governments, are you able to hear me? Yeah.
Yes.
Yeah. Among governments, which is the most encouraging for Bitcoins?
Well, that's a great question. I don't know quite the answer to that, so I would be misspeaking, but I do know many places. I would think about it the opposite. I don't think governments are really encouraging it in many places, if any, but everything is almost, negative. It's been a wild west. It's a free for all, and now regulations are coming in to curb how Bitcoin can be mined, how it can be dealt with to protect investors so that people cannot be taken advantage of. So lots of regulations are coming in place in different parts of the world, both to protect the government and the currency, but also to protect investors and developers around that. Apologies, I can't give you a specific answer. I can look into it and see if there is a answer to that, but at this point, that's the best I can offer.
Satoshi Nakamoto sounds Japanese. And what is Japan's attitude to Bitcoins?
Japan has, to my knowledge, not banned it, but they're also looking hard at regulations. And the name is just, he could be Japanese, or it could be the whimsical coinage of a technology geek who just came up with a name that he thought was fun and creative. Speculations are it is some of the people who have associated with the early days of digital cash I won't name their names, but they are people from American origin, but it could be anybody, frankly. There is just no clue in the name who he is, because he created and gave the code in an anonymous manner that can't be traced back to his identity.
I have a question. Do you think that the recent valuation of Bitcoin is driven by people like Elon Musk, who made a open comment about trading in Bitcoin? No, I mean, whatever he says seems to have a edge, and then therefore they gain much of market value. You think, do you see the truth in that?
You certainly have onto something. The moment Elon tweeted about Bitcoin and said that Tesla would invest and accept Bitcoin, its value shot up. I don't recall the exact rise on that day, whether it was 10, 20, or 30 or 40%, but it did jump immediately and stayed up as a result of that, or partly. He's clearly a market maker. His words carry a lot of sway, and Tesla itself has been unprecedented. Many would call the growth in Tesla and Bitcoin to be similarly speculative. There is no known, normal, rational way to value Tesla based on established means of financial valuation techniques of expected discounted cash flows based on car sales. It just is far too valuable a company in its market cap. It risen from $100 billion or $200 billion to becoming more than $1 trillion, I think. And in many ways, people think Bitcoin and Tesla are very similar. They're all based on future promises that are cloudy, speculative, uncertain, dreamlike, and you have to be a rabid follower and a fan and a missionary believer in that whole concept in order to justify. But that being said, a long answer to a short question, I do believe Tesla's and Elon's comment have certainly positively influenced the price of Bitcoin and its subsequent activity, both by retail investors as well as institutional investors.
What is the thinking within Apple about Bitcoin? So will Apple embrace Bitcoin in someday?
I have no knowledge of the thinking within Apple. Apple is famously a private company, and we operate on a very need-to-know basis, and I certainly don't need to know. And even if I ever need to know, I can't share it. None of this is public or personal info. All of this is personal information, and none of it reflects any sentiment on Apple's point of view. And I have no perspective at all what Apple's perspective is on this.
Thank you.
Mr. Karthik, there is, as you mentioned in your speech also, the Government of India and Reserve Bank of India is not going to allow this. That's very much in the air. Now, if they are likely to do that, how will they control? Because the whole thing is, out of sight and totally digital. Number one. Two, it is like the emperor's new clothes. So how will they find out if something is happening? What is the means of their finding it out? In fact, one lady from Silicon Valley, I think, she specifically mentioned that India should not ban this use of this Bitcoin. So this is the context in which I'm asking you this question.
Yeah, you're right. And there are many famous investors and thinkers in this space. One gentleman by the name of Balaji Srinivasan, who's clearly of Indian origin, and a famous technology investor as well as an entrepreneur in Silicon Valley. He was a former CTO of a company called Coinbase, thinks India should embrace what is called the digital rupee and go for a cryptocurrency of its own and not set out the digital revolution. It's unclear for me exactly how India could monitor and prevent it, or how anyone could, given the anonymous nature of it. But I do believe technological means exist that governments could employ, certainly to understand what happens on networks, or at a minimum, make it hard or difficult. As you know, for example, whole swaths of content is blocked on China's internet. So they found ways to restrict content within China accessible on the internet, something that one might have thought is impossible. So it is beyond my technological or technical understanding what specifically governments could do, but at a minimum, it would block the legitimate and clear open means for citizens to buy and transact in an open manner. companies could not be founded within India in this space. Citizens, for example, bought a small amount of Bitcoin just to be having a skin in the game in a tiny amount. And I could do it through what is known as a Bitcoin wallet that I could download in the App Store and buy and put my dollars and buy it. All of these things are conveniences that would not be accessible because the app came to me through the App Store. The App Store would only release an app in India if it was legal by the Indian government. So these things would have ripple effect on how average people could access, and governments would certainly have probably technological means to sniff it and control it, and penalties that they would impose when and if they detect it, right? So those are some of the things that would happen. But I don't think the chapter is closed on cryptocurrency, even if Bitcoin is not the means. Maybe India will create its own cryptocurrency. There are talks of ideas called stable coin, where the currency is crypto, but its valuation and price doesn't fluctuate. One of the main drawbacks to use it as a currency is it is worth $1 a few years ago and $60,000 today. How on earth am I going to buy anything? If it is going to change in value, I'd be the biggest fool or I would lose money. So there are other innovations being talked about that might come about in India instead of this. Rest assured that I think the smartest and deepest thinkers in legal, technology, and policy are probably spending the time to come to a point of view on this.
Lieutenant Veerappan, you wanted to put a question? Yeah, please unmute yourself and go ahead, sir.
Hello, Mr. Karthik.
Hello.
And sometime back, there were some information I read that there is a middle person who buys a Bitcoin and also sells a Bitcoin. Is that system functioning, or it's only proposed in the early stages?
No, that system is very much there. There are many marketplaces and exchanges where you can buy and sell Bitcoin. Coinbase is one popular example. It's a company that is founded on the ability for the user to have a digital wallet, to be able to buy and sell cryptocurrencies. And they went public just last week. And the valuation for them was an astonishing $80 billion on the opening day. From founding to founding, and they're making it not only in paper, they're generating an enormous amount of revenue, over I think $1.2 billion of annual revenue or annualized revenue around that, massively profitable. And in an example of what is called the flag bearer of the crypto world. And you can go in the US into Coinbase, create an account, and spend $100 and buy a few Satoshis or a fraction of a Bitcoin, or spend $1 million and buy or sell Bitcoins on Coinbase, if you will. Such similar mechanisms I'm not going to either advocate or I'm not aware of in India. And I would say the whole Indian context I would treat with a lot of caution.
It's a ban. It's a ban.
Given the ban and the situation right now.
Thank you.
I find two more hands up. Yes, Rotarian Sam Manipadam, your question, please.
Yeah, Mr. Karthik, you said you have a wallet. So how do you ensure the security or the safety of the wallet? It's an app. We buy, keep the money there, the Bitcoins there, and you transact through that. So we are all used to, NSC or somebody who is a depository. But how do you ensure the legal safety of the wallet?
It's a great question. And it is one where I'm saying I'm trusting this company that creates and holds this wallet called Coinbase. And that's a leap of trust I have taken. They have my Bitcoin, that Bitcoin is worth something, and it is there in that wallet. And just to your point, I tested it out last year and sold a small amount of Bitcoin and got cash in my wallet. And then I transferred that cash from that wallet to my bank, and it worked. And said, okay, it works. And I felt good and I went back to sleep. But it is really a trust that I'm placing, which is why it is then incumbent upon the purchaser to go with reputed wallets or reputed exchanges or reputed things, because this whole thing is all abstract cryptographic code. And if I lose my password to Coinbase, I lose my wallet. And if I lose my wallet, I lose everything that is in it. And there is no way I can get my money back. Even Coinbase cannot access it. It is encrypted in such a manner and around that. And there are stories that people in the early days didn't buy it through Coinbase. The miners mined it on their own computer. If you remember, a miner is the one who creates and gets a Bitcoin as a reward for doing work. And he created and got Bitcoin. He stored it on his computer's hard drive, and then he forgot the password. And there are stories of people sitting on $100 million of Bitcoin, but they can't unlock it because they forgot the password and it is locked. And they're tearing their hair out because that money is there, but they can't access it. And those stories are common as well, if you will. I'll take one last question. And with that,
Mr. Nagappan wanted to ask a question.
Mr. Karthik, Nagappan here. Will this not take away the power to print currency, the power which the government draws? I think the power equation might change world over how countries look at this, because if it is decentralized, and what kind of reaction from the governments we can expect, what will happen?
You're very right. And that's, I think, one of the key things many people are hypothesizing. If you recall, I had a quote a little while ago where one of the people was saying, once this becomes more and more, and even already, governments are not going to allow this transfer of power to happen and are either going to regulate it or outlaw it, like we've seen in some places around that, because they will not abide for a currency that is the central goal of a government to ensure stability for commercial transactions, etc. So to be seen how this unfolds. Clearly at its edge, you could imagine if the entire world was just buying and selling and using Bitcoins to buy milk and buy a car, and everywhere it was accepted, then yes, what need do you have for a currency if it is controlled by Bitcoin, and then you're subject to all the vagaries that come from a currency that is not centrally protected. So a very, very fertile and valid question.
Those with money, the big problem is where to invest, whether with Bitcoin or the 4,999 other cryptocurrencies. And for many, the whole problem is from where to get the money. I'd request Rotarian Ranjit to propose a vote of thanks.
Thank you, President Sujesh. Thanks, Karthik. It was an excellent presentation. You put everything in a capsule form and gave it to us. It would have taken hours for us to research and find out all this. Thanks once again for getting up in the morning and giving us this presentation. Thank you, sir.
You're very welcome. Thank you for the time, and have a great day.
This meeting of the Rotary Club of Madras South and the E-Club of Madras is adjourned.
Bye-bye.
Bye. Thank you.
Thank you so much, sir.
Thank you, sir.
Bye-bye.
Thank you. Bye-bye.
Thank you. Bye.
Ranjit, you start investing in Bitcoin.
No, I don't think. I'm just. I'm happy with what I have invested. Whatever money I have in rupee, not even dollars. So
yeah,
that's
even here, if you're transact, you have to withdraw money from the bank, give them cash, and when you get the money, also it's always bank does not accept if you say that you got money from Bitcoin.
Yeah,
so
that's
it's a big
right.
problem.
Yeah, people who have got a lot of money to play around probably can do it. That's what I think.
Yeah, but
okay.
Then, see, there are ETFs available. You can't really have regulated one.
Which one?
Morningstar, exchange traded funds. So blockchain-based ETFs are there. That is regulated. So you don't really get the advantage of investing in a coin, but you still get the advantage of the growth in the Bitcoin value or cryptocurrency value.
Okay. That's a good idea. That's good.
Yep.
Okay. Thank you, Sam. Bye-bye. Take care.
Everybody.
Thank you, everybody. Buddies.
Bye.